Hey, welcome back to the C Morning Show's Business Talk, where now we're going to talk about boosting your investment portfolio by unleashing the power of stocks. Again, we are part of this on Wednesday, and without further delay, we already have our personal finance enthusiast, and I'm sorry, Dani Rachmat. I don't know what I want to call you, Andy, this morning. Mas Dani, thank you for joining us again. Again, a little recap of what we talked about on Wednesday. Well, first of all, how to open the account. You can just open your phones, get on your apps, download and
pick the one that you like.
Pick which one you like, see the UI that you want. A starting investment, we can start from 100,000 because in Indonesia, again, we have to buy it with minimum of one lot, which is equals to 100 stocks. So if one stock equals to 700 rupiah, if we're not missing
70,000.
Only 70,000. Now, before we move on, I wanna ask, like, what kind of some people asking, what kind of documents that do we need to prepare? Like, who can actually do stocks transaction in Indonesia?
Yeah, ultimately you only need your ID card. Government issued ID card for opening stock accounts in Indonesia. Brokerage account, you only need your ID card. At some point, you will be asked to submit your tax registration. But then, if you still don't have it, then you only need your ID card.
Okay, so let me make sure again. So when you open it, you don't have you don't need your tax ID yet, and or what we call here MPWP just yet. Until what point? When does the tax ID is needed?
Usually, you will need to report your assets. So if you are already over 17 years old, then most likely that you already have a job, right? At that time, you will need to make the tax ID.
Yeah. So the NPWP or tax ID is later on when you're gonna report your income or losses.
Yes.
Again, mind you, with investing in anything, including stocks, there's a risk of losing some money. Now we're gonna talk about investment. We talk a lot on Wednesday, but one of the thing is, you know, how do I pick my first stock? So let's say we already sign up from whatever apps that available out there. We already put the funds, like you mentioned before. We put the fund on our brokerage, and then now it's time. I want to pick
which stock we should buy.
Should buy. What's the, I don't know, the easiest, the safest? Not the safest. I never want to say the safest. What's the easiest way to pick a stock?
Yeah, actually, many people afraid that they will choose the wrong stock.
Right.
But in reality, choosing the wrong stock is quite difficult for a person that is really into stocks. I mean, the easiest way is to buy the stocks that you already use the product or services in daily basis. Like if I use BRI, I just can buy BBRI. If I use the products from, so many people use this company's product. I mean, Unilever, UNVR. This is not recommendation, of course. Just for example, from the soap and then toothpaste and tea, even for ice cream, this company produced that. So you can buy this stock. Is it safe? Because this company down from 8,000 rupiah some times ago to only 4,000 rupiah nowadays. Is it safe? For me, yes, because the company is good and it's already been there like for tens of years before now, and then it will likely to continue to exist and will continue to produce their products.
Okay, so what you're saying, again, this is not a recommendation. If the producer can help us out, please put on the CG that none of this are a recommendation for anything that you should buy. But we just want to discuss some of the stocks that easily available on the products that day-to-day that we're using. For example, you mentioned Unilever, which is they do a lot of products. At the same time, we consume a lot of, like, let's say Mayora or I don't know if Sukanda Jaya or Ultra Milk or all that kind of stuff, like things that we consume daily, or the soap that we use every day, and just look at the back, who are the producers, and then pretty much just look what's their stock, and then how much are they going for. At the same time, now this has become the hard part. You mentioned earlier the past couple of years since the pandemic, if I'm not mistaken. Unilever, I'm not sure about Mayora or let's call ICBP or INDF, which is in Indofood, which is they do also a lot of consumer goods that we consume every day. Their stock's not exactly shining in a better word, but at the same time, they exist for years, and then the questions become. How do you consider a company is so-called good? Like, and this is why I like. What is there like a number that we can look at? Like, if I look at the financial report, it's so long. There's so many things to look at. Like, what is there like one or two key points that we can take out from there and say like, oh, this is can be considered as good, or this is considered as let's wait and see.
Yeah. The products that we use not only coming from those stocks that we mentioned. There are so many other things. So many other things. But for example, those consumer goods stocks. These consumer goods stocks, they don't perform very well in these last few years because other than they did invest in some part of their businesses that stress their financials, the condition, the global pandemic also stressed their businesses. People don't spend that much. They tend to hold their spending, right? So that, make these stocks price went down. But then, when I am going to buy a stock, the key points that I put my focus on is that is the company profitable?
Okay.
That is the most important thing because as a stockholder, you want to get profit from your investment, right? And the profit for your investment is that whether you get dividend paid by the company that you buy the stocks or not. And the company can only pay the dividend when they record profit. So the easiest part is open the financial statement, that very long form, and then go to the income statement part.
Income statement part, okay.
And then look at the net profit after tax.
Net profit after tax.
Yes.
Okay.
And then, is there positive figure there or negative, or maybe, not so good? And then compared to previous years, whether is it increasing or not? That is the most important thing, the net profit after tax, because that is what we are getting from the dividend.
Okay. Now the question still remains. I mean, I can easily see. Okay, let's say I look at the net income and it's positive.
Yes.
Let's say it's positive. I'm not really sure if it's positive. And then, but how can I see like, oh, this is a good time to buy, or is it? I mean, some people like if we're talking about like stocks, we talk about Loh Keng Hong and then like his stocks. Like, does he still own UNTR or something like that?
I think. He
already
sold something.
You're right.
And
so he has United Tractors, he has Petrosi. At the same time, he's making profit at this point. But at the same time, for me, I was like, well, I should have bought it when he bought it.
Yeah.
But I didn't. Like, will it still be?
You never know when he bought what, right?
You're right. but that's the question. It's like, since we're looking, he's taking profit right now. He's making his money. He's making money from his investment, like in United Tractor, Petrosi, or whatever his investment. Is it still a good time for us, a newbie, to get into those stocks?
Yeah, I think I have to stop you right there for a moment. Because if you want to reach Loh Keng Hong level, you will need some time, right?
Yes.
For us, the beginner in investing in stock, okay, I want to get there. I really want to be like him. But then I just get into this investment.
Okay.
So refrain yourself and just get to know the stock but at the level that you are comfortable with. So the very first one is that please try to recognize whether this company is profitable or not and whether this company can generate the profit continuously or not.
Okay.
And then if you can already recognize that, and then you are in the right path.
Okay.
Yes, of course, we need to learn more about that, and comparing different companies from their net profit cannot be apple to apple, right? So then you need the universal ratios that you can use.
Okay.
So that is why we can go deeper into the earning per share, EPS.
EPS.
Earning per share, because earning per share is net profit divided by the total amount of stocks available in the
Alright.
market.
I think we need our board
Okay.
here so we can visualize like what we're talking about. So there's EPS for the ratio.
Yes.
What else do we have for that one?
And then for the EPS, you just divide the net profit divided by the number of stocks available in the market. So that way you can compare compare in the same manner between one company stock with the other, because this is the earning that you get per stocks.
The earning that we get per
stocks, yes.
compared to however stocks that we
Yeah.
All right.
However, not income and stocks available.
Is there any other ratio that we need to look at?
After you know the EPS, then you can calculate the price to earning.
Price to earning.
Yes, price to earning ratio.
Okay.
Whether you.
So let's start with this one. Okay, I don't like this red one. All right, so the first one was EPS.
The first one is the net profit.
Oh, the net profit.
You have to remember that
so
you.
First, we need to look at the net profit
net
from
profit.
the net profit. All right.
And then after you get net profit, you can calculate the EPS.
So next thing is to see if the company is pretty good, is EPS. So this one we want to look at the positive side.
Yes.
So if you see something is on a bracket rate like this, like it's say
Yes.
80 something
Then
like this.
That is warning signal that
this is
maybe you should not buy it right now.
Right. Oh, okay. So you should. Oh, so this.
Not necessarily that you have to avoid that, because in a company's business, we also know that whether there is prospect in the story that the industry will go up or disrupting or something. Yes.
All right. So I want to keep watch on that one.
Yes.
All right. So
not necessarily.
Negative is not bad.
Yeah.
It just you have to watch what's gonna happen.
Yes.
There. All right. So next.
And then after we get net profit, we can calculate the EPS, earning per share.
Okay. Earning per share.
Yes. Obviously, you will want to buy the bigger company, the company with the bigger EPS.
Okay.
150 rupiah per share.
Bigger is better.
Yes, bigger is better.
Bigger is. I hope people can read this. Bigger is better. So how do I calculate this one?
This one is net profit divided by the available stock in the market.
Is the number of
available stocks
on the market.
Yes.
Okay. All right. I think that's pretty easy enough. All right. What's next?
For example, if I may mention for the Unilever, I mean, so many people don't like this company right now. But then Unilever have, as a comparison, this is not recommendation.
Again,
right?
it's not a
Only
recommendation.
just for comparison
for you have an idea. What's the EPS on
EPS for Unilever for the last 12 trailing 12 months is 124.48 rupiah.
I'm sorry, say it again.
124.48.
48?
Yes.
Okay.
This is for per stocks, you get this 124.48 rupiah.
Oh, okay.
Compared to Mayora, Mayora is 105.71.
105.71 per stock.
Per stocks.
That's for
MYR.
RA.
Yes.
I hope I'm not mistaken.
MYOR. MYOR.
Oh, I'm sorry.
yeah, MYOR.
This one is right?
Yes.
Okay, so this is for Mayora. So both are consumer goods, and then if we look at the EPS, so according to the net profits in the, let's say, the last 12 months, you said, from the last 12 months,
I will buy this one.
Unilever has a higher,
yes.
But this is, do we consider this is a big difference between 124 with the 105?
Of course, if you have like 1,000 stocks, 10 lots, 1,000 times like what? The difference, 24.
Like 19?
24,000. But if you have million, 24 million. So that's quite big.
But then, it's quite different, okay.
Yeah, but then again, when we are trying to buy, I mean for investor, we are looking for profit, right?
Okay.
When investing in stock, my profit will come from the dividend.
All right.
So
yes.
I will look at the dividend yield of the stocks that I will buy.
We want to do the dividend yield
Yes,
of
dividend yield. Before we go to price to earning, price to book value, I want to go to the dividend yield.
All right, dividend yield. Before we go to more in depth with the dividend yield, mind you, what we're discussing right now is we're talking about investing, which is different than what people consider trading. On the trading, you usually do short terms, and then you're looking at profits, and then you buy or sell it according to that short times. In investing, there's what we call the dividend, which is if you do a long term, usually like every year when a company has a profit,
yes, they will share it to us.
They will have a share that from that profit they're gonna share something
to
the people who have the stocks. All right, so dividend yield.
Yes, for the dividend yield, obviously I will try to buy the stocks that give the higher dividend.
Okay,
right?
this is tricky right here.
Yeah. For the example, Unilever, they have like 3.43%. Sorry.
3.43%. 43%. This is for the year 2023.
2022.
2022.
Yes.
So this is their dividend. So that means from whatever
we put, we will get 3.42%.
Okay.
This is already not taxable if you reinvest.
So let's say I put in 1 million rupiah into their stocks. So I'm gonna get around 3,000.
3,000, not so big, but if you have 1 billion rupiah there, or maybe 100 million.
So the key in investing is if you put more zero in the back,
yes, you will get more
dividend in the back. All right.
While for Mayora, it's only 0.79.
So I'm sorry, is it
MYOR?
MOI?
MYOR.
MOI.
Yes. It's okay. 0.79.
0.79.
So you only got like 79,000 rupiah.
Wait, this is interesting. Is there a confident level why the dividend is higher on this one comparing to this one? Like, should I be afraid? Like, if I see a higher number, like they basically almost have the similar products, not exactly similar, but this one. So what should I consider? What should I worry about having higher dividend instead of this?
We can see that the upper company has way bigger size than the lower one, and then their profitability also better. And we know that for this company, they have already like more saturated market and more developed product compared to the below. So that is why they put more money to be shared to their shareholder, while for Mayora, maybe they use their profit more into product research or something.
Right.
And they don't share it to this shareholder.
Okay, so again, we're not saying Mayora is a bad company, and then again, this is not in a recommendation. It's just what we're seeing right now is it could be that Mayora want to invest whatever the earnings from 2022 back to the company to make it better and then make more profits. And at the same time, Unilever is already confident enough with the products that they have that they will offer 3.43%. I mean, I've seen dividend yield up to like 13%.
Yeah.
That kind of worries me because again, the stocks number can go up and down drastically.
Yes, sure. But then you should see the industry. You cannot say that directly that is bad, that is good. You should analyze the whole thing.
So this is we're talking about consumer goods.
Yeah,
this is what's going on with consumer goods. But like if we're talking about mining, if we're talking about transportation, health, and all that kind of stuff, even banking.
Different discussion.
It's different discussions. All right. So
I just want to add something.
Yes, please.
This, if you want to think whether this is good or not, you can compare with the putting your money in the bank. I mean, depositing your money in good bank like BMRI, BBRI, you only got like 2.5% before tax. With 20%, you only get like 1.8 or something percent. So this is still good investment.
The 3% sounds better now with the investment of 1 million.
1 million rupiah.
If you're lucky enough to get to 1 billion. Now some of the questions now, like, all right, so we mentioned earlier, the bigger you put in, the bigger your dividend, the bigger you're gonna make at the end. How am I gonna reach to this number? Like I don't make that much money. Like,
yeah, you can always start with 1 million rupiah without this one.
Okay, so let's erase that one. So let's start with 1.
It will take time. It takes time, of course. Start with 1 million rupiah. You get 3,430 rupiah, and then you buy the Unilever stock again with this dividend.
So you
reinvest.
So when you get the dividend, one of the things that you can do is put in those
adding
money
into your investment.
So
by doing so, next year you will get more than this one.
All right. So even let's say we bought it in 2022, you bought it $1 million. Before even you adding 3,430 rupiah, you probably already gained. Let's say let's not go crazy. Let's say just 1,000.
Yeah, okay.
And then you add another one. By next year you're gonna do another 1,400. And then keep doing that. And then we're gonna talk about compounding and all that kind of good stuff. Now, would you recommend people to keep putting $1 million every month? Month after month after month, or would you recommend people to put all the money up front?
If you know when the stock will go down, then I recommend just put your money in your saving account and buy all at once. If you know when the stock go down.
So if I can know what's gonna happen in the future, then I should.
But nobody, right?
Okay, say it again. So instead of doing this, like putting 1 million every month to the stock that you want, you
just keep in your saving account and wait until the stock price go down. But if you don't know when the stock will go down, just do the dollar cost averaging by investing regularly.
Let's have a seat on that one. Now that's interesting because, like, how do I know that? It sounds like it's a different discussion that we're gonna have on, like, knowing how a stock's gonna perform. Now, even though it's investing, I mean, I understand that if you do trading, of course, people are gonna look at the cut loss. Like, if the stocks go down right away, you wanna know like how many percent, and you cut it off. Mind you, to let you guys know, in Indonesia, there's heavy regulation. One of the things is until up to June, they're gonna cut off every day. If the stocks hit 7% down, then they're gonna stop the transaction right away on that one. So it's not gonna go below 7% at the meantime. But at the same time, by June or September, if I'm not mistaken, it's gonna go down to 25, 35%, which is not as bad if you look at other countries, which is just let it go down.
No limitation.
Right. So, but at the same time, at what point? Again, there's always risks.
Yeah.
And then I have to remind people, like, no matter what we're talking about today, there are risks. At what ratio should we do cut loss on investment? Like, at what point should I say, like, okay, this is not a good investment anymore, or maybe I should buy more?
For trading, it will be easier to answer, because for trading you have to be very disciplined and you have already set the cut loss level that you can accept. But then for investing, it is not that straightforward, because for investing, I will see that whether this company has any bad news, any mismanagement in their operation, or how is the industry outlook going forward. If there is still, like, I hope some companies that still making losses, but I see that the prospect is there, the story is there, and I still keeping them, and I still adding the stocks for that company, even they're still making losses. So that when we should cut loss for our investment, if you see there is no more story there, no more prospect in your investment, then just cut loss.
All right, well, now that's a heavy one. We have to talk more on that one, but for now, let's take a break. But when we return, we have more updates from around the world when we return on C Morning Show here on C Today. Stay with us.